Hi everyone. Today we're going to dive into an aspect of the legislation known as the Corporate Transparency Act, or CTA for short. This act significantly impacts the reporting of beneficial owners of both U.S. and foreign entities to the Financial Crimes Enforcement Network, commonly referred to as FinCEN. One of the major parts of complying with the act is determining the beneficial owners of reporting companies. Now, this may seem super easy, but there are a few things you'll want to think about. Traditionally, a beneficial owner was someone who held a financial interest in a company, as defined under the Bank Secrecy Act. However, the CTA broadens this definition to include individuals who have substantial control over a company. Let's explore what substantial control really is. The CTA identifies three main ways through which an individual can exert substantial control over a company, therefore qualifying as a beneficial owner. First, they hold a senior officer role. Second, they have authority over appointments and removals of certain individuals. And third, they have important decision-making power. Now, the first category includes individuals serving in high-ranking positions, such as president, CEO, COO, CFO, or similar roles. However, it's not just about the formal titles. What matters are the functions and duties performed. Even in companies without these traditional corporate titles, members fulfilling the senior management responsibilities need to be identified. The second category involves individuals who have the power to appoint or dismiss senior officers or the majority of the board of directors. This authority, in turn, gives them significant influence over the company's strategic direction and operations, making them key figures in the identification of beneficial owners. The third category is about the capacity to direct, determine, or significantly influence critical business decisions. FinCEN categorizes these decisions into three areas regarding business, financial, and structural. Some examples of business decisions include those about strategic focus, venture creation or termination, the entry or exit of significant contracts, and major operational changes. Some financial decisions encompasses major asset transactions, investments, budget approvals, issuance of stock, and financial structuring. The structural decisions involve corporate restructuring, mergers, dissolutions, and changes to governance documents. It's important to note here that these are all major important decisions. Those who are making smaller management decisions might not be making these as significant of choices. FinCEN also introduces a fourth, broader category in the regulations, often referred to as the catch-all. This category includes any other form of substantial control over the reporting company. This means that control exercised in atypical and unique ways can still be considered substantial. These categories of substantial control may lead professionals to advise their clients to err on the side of caution, and for any of those individuals on the fence of the definition might safely be reported. An often overlooked aspect of substantial control involves considering those holding a power of attorney or a POA. These individuals may not have formal title or position within the company, but can make decisions on behalf of the company because of its relation to an owner. Their decision-making capabilities can equate to those of a beneficial owner. Now, FinCEN doesn't envision that the performance of ordinary, arm's-length advisory or other third-party professional services to a reporting company would give that individual the power to make the important decisions. This means that if a tax or legal professional is acting merely as an agent within the scope of providing their professional services, they would not be considered beneficial owners. Now, I want to talk a little bit about a specific kind of business structure and what to pay attention to, as substantial control can be held directly or indirectly. Determining the beneficial owners in scenarios when control is held through trusts requires examining the roles of trustees, beneficiaries, and others within the trust structure based on their control. A trustee may qualify as a beneficial owner if they have authority to manage or dispose of trust assets. Beneficiaries can also be considered beneficial owners if they are the sole recipients of the trust income or principal, or can demand substantial portions of the trust assets. Grantors and any individuals who establish the trust might be beneficial owners if they retain the right to revoke the trust or withdraw its assets. These roles depend heavily on the specific terms and operations of the trust. indicating that beneficial ownership needs to be evaluated on a case-by-case basis with the input of legal experts. Understanding the CTA and its definition of substantial control is crucial for businesses. Identifying beneficial owners correctly ensures compliance with FinCEN's regulations and helps maintain the goal of corporate transparency. Thank you for joining me today to learn about this important part of the newly effective legislation.